Hedge funds, mysterious, exclusive, and often misunderstood. These investment powerhouses promise high returns, but with high risk. What exactly are hedge funds? How do they operate? And are they worth the hype? Let's break it down. Welcome to the channel. My name is Eric Silvaggi. I'm a wealth advisor with Aegis Wealth Management, a part of Wellington-Altus Private Wealth. The goal of our channel is to educate Canadians on the complexities of personal finance and to provide clarity to help them reach their goals. If you're new to the channel, please make sure to subscribe and click the like button. What is a hedge fund? A hedge fund is a private investment partnership where fund managers pool money from accredited investors and institutions aiming to outperform the market. Unlike mutual funds, hedge funds have more freedom in their investment choices, often using leverage, derivatives, and alternative assets. They are high risk, high reward, and usually require a substantial minimum investment. How do hedge funds work? The term hedge fund comes from hedging, reducing risk by balancing investments. A hedge fund might hold both long positions, betting on stocks to rise, and short positions, betting on stocks to fall. This strategy helps offset potential losses. For example, a hedge fund heavily invested in tech might also invest in commodities to counterbalance market downturns. Common hedge fund strategies. Hedge funds come in many flavors, but here are the most common strategies. A long-short equity is investing in stocks expected to rise while shorting stocks expected to fall. Global macro, making big bets on economic trends like interest rate and currency movements. Event-driven, profiting from mergers and acquisitions and bankruptcies. Market neutral, aiming for zero market risk by balancing long and short positions. Distressed securities, buying stocks and bonds of struggling companies hoping for a turnaround. Fund of funds, investing in multiple hedge funds to diversify the risk. Who invests in hedge funds? Hedge funds aren't for everyone. They cater to accredited investors, those with high income or high net worth. Institutional investors like pension funds and insurance companies also use hedge funds to diversify their portfolios. Unlike mutual funds, hedge funds often require investors to lock in their money for a certain period. Hedge fund fees and risks. Hedge funds often use a fee model called the 2 and 20. That means a 2% management fee charged annually regardless of performance and a 20% performance fee on profits. This structure can be lucrative for fund managers but expensive to investors. Hedge funds also come with a serious risk. Lack of liquidity. You can't cash out whenever you want. High leverage. Borrowed money means bigger gains or bigger losses. Limited transparency. Hedge funds don't have to disclose their holdings like a mutual fund does. Hedge funds versus mutual funds. Unlike mutual funds, hedge funds have fewer regulations, invest in a wider range of assets, and use more aggressive strategies. Mutual funds are available to the public, while hedge funds are private and exclusive. The trade-off? Potentially higher returns, but with greater risk and cost. So, are hedge funds worth it? They offer big opportunities, but come with big risks. If you're an accredited investor looking for portfolio diversification, they might be a fit. But for most people, traditional investments offer a safer bet. Let's go over some common questions about hedge funds. Are hedge funds only for the ultra wealthy? Mostly yes. Hedge funds require accredited investors with high income or high net worth. Can hedge funds guarantee profits? No. While they aim for higher returns, hedge funds carry significant risk with no guarantee. How are hedge funds different from mutual funds? Hedge funds use riskier strategies, have fewer regulations, and limit investor withdrawals. Do all hedge funds use the same strategies? No. Different hedge funds focus on various strategies like long-short equity, event-driven, and global macro. Can anyone invest in a hedge fund? No. You need to be an accredited investor, meaning you must meet certain financial requirements. Want to learn more about finance, investing, and market strategies? Hit the subscribe button and let's keep the conversation going.